The COVID-19 pandemic delivered a global economic shock of enormous magnitude. Economists predicted that it would lead to steep recessions that would last for decades. Despite signs of slower growth as the world set on the recovery path, in February 2022, Russia invaded Ukraine, and it's been over 300 days. The war is still raging. So compounding damage from the Wuhan virus pandemic and the war in Ukraine magnified the slowdown in the global economy. From gas to groceries, 2022 has been a whirlwind for consumers. Prices rose at the fastest pace in decades. The global economy had not experienced an inflationary shock of this magnitude since the start of the 1970s. Experts say the world economy is entering what could become a protracted period of feeble growth, along with elevated inflation. So the most important question that we stare at right now is, will 2023 be the year of recession? Is recession inevitable? Economists have painted a grim picture. According to the Center for Economic and Business Research, the world faces a recession in 2023. Whether it is deep or shallow, long or short, that is debatable. But analysts say the idea that the economy is going into a period of contraction is certain. Historically, when there is high inflation, central banks jack up interest rates to quell the rising prices. And that results in a downturn or recession, as economies ultimately cave under the weight of higher interest rates. In 2022, the global economy surpassed $100 trillion mark for the first time. But experts say it will stall in 2023 as policymakers continue their fight against the soaring prices. The findings of the CEBR report are more pessimistic than the latest IMF forecast. In October, the International Monetary Fund had warned that more than a third of the world economy will contract, and there is a 25% chance of the global GDP growing by less than 2% in 2023. The IMF defines this as a global recession. The report adds that by 2037, world GDP will have doubled as developing economies catch up with the richer ones. It says a shift in balance of power will see East Asia and the Pacific accounting for over a third of the global output, while Europe's share shrinks to less than a fifth. And that said, China will not be overtaking the US as the world's largest economy until 2036, which is 6 years later than expected. China's zero-COVID policy, the rising trade tensions have slowed its expansion. And the report also predicts that India will become the world's third largest economy by 2032 and the third $10 trillion economy in 2035. Coming back to 2023 now, the IMF projecting that global growth will fall to 2.7% in 2023. Leaving aside the global financial crisis and the worst stage of the pandemic, if this happens, it would be the weakest year for the world economy since 2001. Whether the world economy slips into recession or not, that could come down to three broad factors. One, what the central banks will be doing next. Two, reopening of the Chinese markets. And three, energy prices. Let's take a look at them one by one. Central banks. The IMF says inflation is the most immediate threat to current and future prosperity. While inflation may have started to come down in the US and Europe as energy prices begin to stabilize and interest rates go up, central banks have made it clear that they do not intend to stop hiking the rates soon. The hikes may be smaller, but they are likely to continue until inflation is back near 2% and it stays there. If the prices continue to rise, there could be aggressive steps by central banks which would further pressurize the global economy. The second factor is reopening of the Chinese economy. For the last 3 years now, the Chinese economy has been restricted. Now, after protests, China is rolling back its zero-COVID policy. The reopening of the world's second largest economy could spur growth, but it comes with major risks. A wave of infections is sweeping China. Reopening its borders would mean infecting the world. Several countries have already brought in restrictions on travelers from China, fearing the spread of the Wuhan virus and the development of new variants. The third aspect being energy prices. The war in Ukraine continues to add to the uncertainty, especially for the European nations. They were heavily dependent on Russian energy, but they are now weaning themselves off. So they could continue to face shortfalls. The IAEA says Europe could face natural gas shortage in 2023 if Russia cuts off all gas exports to the region and the weather turns colder. Shortage of energy supplies has been pushing up the prices in Europe, and it could further take them higher. A recession or no recession, a shorter one or a prolonged one, economists and analysts will continue this debate. What we need to understand is that the next 12 months are likely to be difficult. Even if a global recession is averted, many countries could still face serious downturns. Rising food prices, surging energy prices, painful rise in unemployment. How severe they may be or how long they might last remains to be seen. WION now available in your country. Download the app now. Get all the news on the move.